ARK Investor founder Cathie Wood is a longtime Tesla bull. Her 2026 price target for the electric vehicle maker's shares is $4,600. Tesla, though, isn't the largest holding in ARK Innovation ETF anymore. That distinction now goes to video streaming service provider Roku. It accounts for about 8.4% of ARK Innovation's holdings. Tesla accounts for about 8.2% of the fund. The rest of the top 5 holdings are Zoom Video Communication at 7.9%, Exact Sciences at 5.9%, and Block SQ at 5.7%. For today's video, exclusive for our Fortune Fastlane members, we will be talking more about why Tesla is not Cathie Wood's ARK Fund's darling anymore. So without further ado, let's get into the video. Tesla has not lost its top spot in the latest stock rankings. Although Tesla has dropped 27% recently, its position is still high due to other companies' performances. On Friday, Roku's company decreased by 12%. Tesla stocks have been weighed down by the drop in the tech sector. Also, his potential acquisition of Twitter has created an overhang on the shares. Stock is down 38% since Musk went public with his purchase of Twitter. The S&P 500 and Nasdaq Composite are also down 15% and 22% respectively over the same period. Investors are worried about how much time Elon Musk is spending on other projects. In his defense, he does have a lot on his plate with Tesla, SpaceX, The Boring Company, and Neuralink. However, Musk did reassure Tesla shareholders that Twitter takes up only 5% of his time, and that he thinks about Tesla 24/7. Wood's ARK Innovation Fund is down 23% over the past month, due in part to the decrease of stock share on Tesla. The fund has also declined by roughly 55% year to date. As interest rates have risen, investors have avoided higher growth stocks. High growth companies generate revenue far in the future, and when interest rates are high growth earnings are worth less than they would have been if they had been generated at a time with low interest rates. This trend hurts richly valued stocks more than others. Tesla stock is about 2.3%, and also Roku stocks have gained about 2.5%. S&P 500 and Dow Jones Industrial Average futures are up about 1.1% and 0.9% respectively. At the end of March, Tesla made up 9.7% of her ETF's portfolio, with Roku comprising only 6.4% of its overall value. But now, according to her ARK Invest website, the streaming service provider now makes up nearly 8.4% of her ARK Innovation Exchange traded fund, versus just over 8.2% for Tesla and other major holdings like video conferencing provider Zoom. After the news, it confirmed bearish sentiment toward the stock, as an insider report showed that his other company, SpaceX, had paid hush money to cover up a potential sex scandal. However, Elon Musk has denied the claims. Shares in Elon Musk Tesla tumbled, falling 7% on Friday to their lowest point not seen since August. The stock had been essentially flat, following expectations that Musk would buy back company shares. In comparison, Roku and ARK Innovation both shed a smaller percentage of their stock value than the Nasdaq, which led by 1%. Has Wood dumped more Tesla stock? ARK Innovation specializes in stocks with a high risk and high return. They look at disruptive technologies with maximum exposure to them. These include a variety of emerging technologies, including artificial intelligence, genome sequencing, blockchain technologies, and robotics. Tesla has been her most high conviction buy because it incorporates these trends. Her team even came out with a price target for Tesla in 2026, which is $4,600. This would make for the biggest upside potential. 7 times as much money could be made on Tesla. Unlike her recent decision to trim her Tesla holdings to free up cash for an investment in General Motors, however, there's no indication that Wood dump any further shares in Elon Musk's Tesla. Instead, it appears as if Roku's share price performance organically led to it surpassing Tesla as Wood's largest single position. This has not been a help for Wood, as mentioned. Her ARK Innovation ETF is currently down 57% since the start of the year. To note, Tesla is a key holding for ARK, which has surged in prominence as high-growth stocks become more popular within the stock market. However, the ARK Innovation ETF has suffered during a downturn, plunging over 50% this year so far. Tesla was the largest company to be excluded from the S&P 500 ESG index. This index bases its weight on share prices, meaning that Tesla is significant only in terms of its share price contribution to the index. In a blog post, an S&P 500 executive noted that Tesla fell off the list due to issues with elements of its business, including a lack of a low-carbon strategy and concerns about its internal practices. ESG indices is an important position at S&P Dow Jones Indices. The job involved analyzing financial and investor behavior. Margaret Dorn, the Senior Director and Head of ESG Indices, North America, is looking into ongoing allegations of racial discrimination at Tesla's California factory and a federal investigation into crashes linked to the company's autopilot technology. Dorn states that the company's rating was both negatively impacted by recent events, such as Tesla going bankrupt at the Model 3 production fallout. These events reduce its chances of scoring highly at the ESG criteria level, as well as its overall ESG score. Elon Musk released a statement in which he argues Tesla's exclusion is an act against manufacturing and industry, not his own company. He claims this decision comes from what he calls phony social justice warriors, representing the venerable S&P. Musk said that Exxon is the 10th best company with their environmental, social, and governance rating in the world according to the S&P 500, while Tesla did not make the list. Musk believes ESG ratings are a scam. Later on, Musk lashed out at the Democrat Party, telling Republicans he switched his allegiance to them. Later, Musk warned that dirty tricks campaigns would come from left-leaning figures in the days ahead. Tesla's removal from the S&P 500 was a blow to the company. The stock has declined approximately 40% this year, accompanying the downturn in the tech industry. Wood usually comments on major storylines that involve Elon Musk. Wood revealed last month that ARK, a major tech investor, has been steadily trimming back its stake in Twitter while noting that the company is in for a lot of management distraction due to Musk's takeover bid. Elon Musk is delaying a $3 billion buyout deal with Twitter while he seeks clarity on the percentage of bots that exists on the social media site's overall user base. With all of that, if you're not familiar with Roku, then don't worry because we are here to walk you through. So, what does Roku do and how does it work? Roku is a service that lets you watch movies without the need for cumbersome equipment. The value Roku provides is that it easily allows people to access television no matter what they are interested in. Many people like the idea of the Roku and use the service. The company helped customers say no to a cable while increasing the streaming experience. We are able to watch a number of different channels such as Netflix and HBO Go through the Roku interface. Of course, you want to use Roku to save money and have convenience. So, if you want to use a Roku, you have two options. Buy a device with a Roku software integrated or buy the standalone streaming device. Roku investors since its IPO in 2017 have seen strong returns. Remember that Roku's initial price was around $26.54. Now, 5 years later, Roku stock is trading at around $84.38 per share, with the highest stock price of $479.50 last July 2021. So where does Roku make the most money? They earn revenue from the sale of streaming players and from users who view advertisements and subscribe to their service. Aside from that, they earn platform revenue as users engage with content on our platform, and they intend to continue to grow their platform revenue by monetizing their TV streaming platform. So they have two income-generating segments. One is through the platform with the advertising and subscription. The other one is through devices. Guess which segment brings in more money? Yes, it is a platform segment. The idea is genius, for it brings customer convenience and simplicity. The customer starts with devices and gains an entertainment dashboard with all the technology they could want. After, integrate TVs and roll out a Roku channel to make even the most prolific customers want your product. Finally, advertise and subscribe to the service to provide the best experience during usage. Indeed, the average revenue per user due to advertising is going up. The platform business should continue to grow throughout this year and the next and contribute to Roku's income. If you want to see more growth on your Roku platform, you should keep watching this segment and its growth. Platform growth means higher margins and potential increased revenue per user. There you have our Fortune Fastlane video for today. Don't forget to subscribe to our channel, click the notification bell, and like this video. If you think that we have delivered value, please share this video with one person. Just one share is enough for you to show your appreciation for the commitment and hard work we all put together in creating this video that teaches and helps you on your mission of building your own fortune. And you don't know that one share could go a long way. And keep in mind that no matter how many times you are going to watch this video, you won't see any results unless you take action. Goodbye and see you on the next one.